Equity markets have mostly risen to new all-time highs, while the economy in Europe is shrinking. Could this be a problem? At first glance, this does not fit together. How can equity markets rise while the economy is shrinking, inflation is high, interest rates are at all-time highs in Europe? Well, if you look closer, the contradiction is not so large actually, because while the economy is shrinking in Europe, globally it's still growing. And even equity markets in Europe have companies in them that profit from global growth. Interest rates are high, but they will be falling this year. Why? Because inflation has been high, but has already come down a lot. So the outlook is actually not that bad. And even in Europe, the economy should improve over this year as lower inflation rates coupled with high wage increases increase real wages. So people will have more money to spend this year, completely different to the last 2 years, which should improve the economic outlook. Low interest rates help as well. So we're actually optimistic for the medium term on equity markets. Still, we see that many investors have a bad gut feeling when they see equity markets rising at new all-time highs, and they should increase equity exposure. Well, let's look at historic data, at the real data that we have for the last 50 years. And they show actually that you should increase equity exposure when equity markets hit new all-time highs. Just have a look at the chart. What we did here, global equity markets, so the top companies globally over the last 50 years around, how their value, the equity index, has increased over time with the usual ups and downs, but over the long term you have this rising trend. And what we did is we put a green dot at every point where the equity market hit a new all-time high. It's difficult to see because there are so many all-time highs, but you see these green areas on the line. That's the periods when markets have made one new all-time high after the other. And that's exactly the point. What you see is that for an equity market that has a long-term rising trend, it must make a new all-time high frequently, otherwise how could you have an upwards trend? If you're looking for a deeper explanation how this can be, well, look at the next chart. And I think most of you know why we have this long-term rising trend in broad equity markets usually, because when the economy is growing, there are more people producing more, consuming more, technology is getting better, the price level is increasing, then the total sales volume of all the companies in the market is also increasing over time. Therefore, they are earning more. Their profits will increase over time. And that's what you see here in the chart. One line is the same as before. It's the value of those equities, an equity index over the last 50 years, ups and downs, but rising trend. And the second line, more or less the same trend, is how much these companies are actually earning, company profits. And as on average, companies are earning much more now than 10 years ago, 20 years ago, 50 years ago. They're also valued much higher, valued more on the equity market, despite being expensive. Yeah, that's exactly the point. Equity markets can be higher and not be more expensive because the profits have risen at the same time. How does this apply to the equity markets in Europe in the current situation? Well, I also brought you here a chart. The last 4 years, one line is how a broad European equity index has increased in value over the last 4 years. Well, not much as you would expect. You had Corona, energy crisis, recessions, blah, blah, blah. So in total, the equity market has gone up in this measure by roughly 10% in total over the last 4 years. But at the same time, what the companies behind this equity market have been earning has risen by around 50%. That's the second line. Company earnings have gone up much more. So while you look at the chart and say, well, the equity market in Europe is already so high, should I now increase exposure? Well, in the short term, it can go up or down. We don't know. But the new all-time high should not keep you from a high equity exposure if you want this long term, because what the companies are earning in Europe on average is much higher already. So there's a decent room actually for prices to pick up, for equity values to pick up, just to close this gap to what company earnings have risen already. Given with falling interest rates, a potential economic improvement over this year, not a bad starting point for good medium-term performance on equity markets in our view. So wish you good luck investing. Don't forget to like us, subscribe us, etc. And looking forward to next time. All the best.